Okay, back to Bybit. Looking at Bybit this week, can see what is going on with the leverage portfolio. So this week I played around with changing the portfolio from isolated margin to portfolio margin, as you can see here. And available balance, margin balance, you can see we are basically available balance, the amount of balance that can be used to open a position. Available balance equals margin balance, because part of it was used to open a different position. Then we have this one here. Okay, available balance equals margin balance minus initial margin. Okay, so sitting around right around $1,400. And what kind of position do we have right now? Well, I decided to mess around with an options position that I could not buy with USDC before because I had USDT and I did not want to convert the USDT into USDC and back again because of the loss that's incurred going back and forth. So I tried this on portfolio and got basically this weekend position options coverage, which is very interesting. So for a few bucks, I had one Bitcoin worth of downside coverage for the weekend. And there's 5 hours and 18 minutes left. And currently it looks like this is most likely going to expire worthless. What does that mean? It means that fees will lose $5 and unrealized P&L. So the amount I paid for it will basically lose $42. So 42 plus this $5, it's a fairly decent chunk loss. I probably shouldn't have made this size. I probably should have treated this here where you come here and you see where it says ask and bid. Look at this. So this one here is like $50 and $55 for $125 and $130. So those spreads are not that far. But if you come down here, it's 5 and 10. 5 and 10. Well, this is double. The ask is double the bid. So for that reason, I should have put in a bid instead of trying to just buy up the ask. And I would have been able to get it at a much lower price. So that was one mess up because this did not need to be $42. It probably could have been $25. Is it the end of the world? No. Remember in the beginning, I started this portfolio for learning. Yes. Learning happened, clearly. I just explained to you what I learned from this. And the other thing I could have done is I could have got coverage for around the position size that we've been doing. So imagine I had, instead of quantity, here, 1 Bitcoin. Let's come over here and we could say, okay, for $5, let's get 0.06, right? Then we would have how much? We would be able to say, okay, and roughly, quickly on the calculator that you cannot see, I have open here, I do 6 cents, or sorry, 0.006 Bitcoin times $5, and you'll find out, wait, we could have got coverage for the position size that we've been doing for 30 cents. 30 cents. That's it, 30 cents. Now that being said, it would have been significantly more than 30 cents because at one point when I was getting my position, the bid was $30. So even in that case, it would be about $1.80. And this would have been much more interesting position to have. Why? Because for the weekend, if I had a position that really only cost me $1 or $2, then I was able to cover against extreme low liquidity, fall in price in only that. So basically, there's a chance, because right now we have a lot of open interest, that maybe somebody wants to crash the market on the weekend. Why on the weekend? Because there's typically less volume on the weekend. And if you can cause cascading liquidations, then you can cause a massive movement in the market that might be more difficult to do during regular volume. Okay, and if we look at what else is going on, we can see that this week I also made some money. I made some money with this close. In the last 7 days, the close happened on the 26th, so 2 days ago. I obviously lost more than I gained this week because I lost more with the options contract. But the fact that this position made money at all is actually quite good, because let's look at it for a second. The position that we are discussing is this. So what happened? It looked like on the 4-hour chart, Bitcoin was going to cross up after a long run down on the MACD, right? Very significant, clearly holding below. And it looked like, I was pretty certain, we will cross up. Hey, and look, I was right. I purchased here, and then look what happened. And it continued up. It was quite profitable until, while I was sleeping, the market decided, nope, we don't want to go past here, and started coming back down. And as it came back down, I was still basically taking the position that we are above here on the MACD. And if we come down to stochastic RSI, we were way up here in highest momentum and had not crossed down over this 80 point here. We didn't break down yet. Eventually, sorry, I was awake here, but I was sleeping here, and while I was sleeping, my stop loss got triggered. What happened? My stop loss started way down here, where I obviously would have lost some money, and got moved way up here to 67,000, where I was able to actually take some profit, even though this crossover effectively was failed. It went up and then went straight back down. Unlike these two, where this one clearly went up and stayed above for a long time, and this one below for a long time also. Now, that being said, when we crossed over is when I decided, maybe we will have some puts. Something's not right here. Maybe this is going to be negative short term. And since then, I basically kept my puts, because even though we crossed back up again, this cross up has given me very little confidence. First of all, we're already showing that we might be losing momentum here, and we haven't even gone higher than the previous high. We went all the way down from here. Our rally was failed, right? So It's just not showing strength. Same thing here. Look at RSI. Looks like, wait, a lower high. And also looks like stochastic RSI will likely cross down in the next few hours. What do I think will end up happening here? Well, I'll probably be right, but also wrong on my put options because my put options were probably bought too early. And maybe I will consider a slightly longer term put option that only covers the size of position that I have been trading, is 0.06, because it will be much, much cheaper than obviously the whole Bitcoin position. And it would actually allow me to profit if the market decides that, hey, we don't like this level here and we want to go lower. Where do I expect it to go lower? Right around this level here, the 64,000 level. And then bottom out. I think that this isn't, basically you have your rally down, you have a rally up, and then you have the end. This is all one pattern here. This part here is your final cross down. We may not even take a lower low here. The other alternative that I would expect to see here is actually, maybe we actually put like candles down here instead of just wicks. Should be very interesting. Anyways, that's basically all I have to say about this leverage trading portfolio for this week. If we go back over to unified account P&L, we see the portfolio is still up 13.55%. Not bad, not bad. And the market really hasn't moved a lot. Last week was obviously better at, well, on the 24th, so 4 days ago, at 22%, was obviously better than 13, but we will get back there. This has been another video in this learning journey. Thank you for watching and have a great week. Thank you. Goodbye.